Good morning. It is Monday, June 25th. Hope everybody had a great weekend. Taking a look at the chart, I'm going to start off with the the SP 500 30-minute chart, just showing last Thursday and Friday's price action. You can see Thursday we had a huge sell-off in the market. Market became actually oversold. The volume clearly shows strong distribution selling. The big volume spikes were all sellers. And then on Friday, after the big move down, Fridays are usually a little more of a subtle day. Usually volume dries up around noon. From there, the market will usually drift a little bit higher, but overall we saw a little bit of a move up on Friday, just simply more or less a dead cat bounce after a strong sell-off. Everybody's kind of just sitting on the sidelines, don't want to get involved pre-weekend, and they want to just see what traders are going to do, if there's going to be more follow-through selling. So just looking at the Thursday strong sell-off and then this little bit of a bounce here. If we look at the market sentiment using the bar chart tables here, you can see on Friday we ended up seeing advancing shares about 3 to 1 on the ratio, meaning there's about 3 buyers to every 1 seller, and usually that means that the market is a little bit overbought. And again, if we're in a downtrend, which the market is flirting with rolling over very sharply here, this level usually indicates that we are going to see lower equities the following session, which is today. Now just zooming in on the bar chart momentum, you can see here anything over the 101, I consider the market to be overbought on a very short-term basis for a one-day basis, and anything below the 99 is considered to be oversold. So what we saw last Thursday, we had that huge sell-off in the market. Market closed down here. Of course, we're oversold in this territory, and then on Friday we ended up having a little bit of a bounce in price, went right back up into the oversold territory on Friday, meaning that today we should see equities move lower at the open or throughout the trading session, and that's what we're seeing in futures trading. Equities are actually down about 1%, and because we're going to probably see this indicator back down in the oversold conditions. The markets are starting to get a little more choppy, and I do think there's a little bit more downside before we get any type of month-end pop in price. Anyways, we're going to keep our eye on that. Looking at the stocks trading above their 20-day moving average, which is a pretty key chart. We've got a key level here around the 50%. This is the key pivot point for it. We did see prices pull right back down to the 50%. Had a little bit of a bounce on Friday, and right now this morning we'll probably see it right back down at the 50%. But overall, the market is trying to hold up here, and if it can't hold up, then we're probably going to see possibly another week or two of actually pretty strong selling. So jumping to the charts real quick, looking at let's go to the daily chart of the SP 500. This is the SPY ETF, and this is the daily chart again. So if you see here, we've got some pretty key moving averages. We've got the 5, 14, and 20-day moving average, and we had a strong sell-off right down to that level. A little bit of a bounce. Very similar price action to what we saw right here, and that's kind of where we're trading right now. We're this morning in pre-market trading, we're actually right down to this 20-day moving average. So we've sold back down, testing this level, which acts as a pretty good support zone right through this previous little kind of basing pattern it's formed. Also got the 14, 20-day moving average, and we'll see if buyers end up stepping in today and we see another move up similar to this. If we see another push up to maybe a new high, which will act as these key resistance levels, and from there the market could actually roll over fairly sharply. Now we are coming into month end, we are coming into long holiday. Usually you see prices move up into holidays and into you get some month end buying as funds try and catch up. So we could see I'm kind of leaning a little bit more towards higher prices, simply because if we just clear this chart and you look here, we've got the key moving averages are all curving up. So we've got the 5, 14, and 20. They're starting to move up. Prices trading above them, flirting right at them at the moment this morning. And we've got the holiday ahead of us. So I am kind of leaning a little bit towards we could see another push to a high, kind of get 1, 2, 3 pushes, and from there we could actually get a very strong sell-off in July in a week or so. So it's kind of where we stand in my outlook for the SP 500 at this time. Looking at the US dollar index, just pull that up real quick. Here is the US dollar index zoomed out several months, and you can see we've had a break of multiple key resistance areas, which are these blue boxes, and this big run we started to have a correction, and we've come right down to pretty much the 50% Fibonacci retracement, which is into this previous pivot high support box, and we saw a very strong launch out of there last week. Now if we just zoom in a little bit, you look at this price action, the measured move pretty much shows that the US dollar should work its way back up to 83.50 area. You've got a move up, bull flag. If you just take this move and measure it up, bring us right back up into resistance into these previous highs here. And of course, if the US dollar continues to move up, again, this is a 4-hour chart, so this could move up literally in a day or so back up to that level. The market could bottom out, and then we could see some strong buying going into the second half of the week as the US dollar kind of pulls back and finds resistance there. So it's kind of where what we're looking at the US dollar index. Overall, it does have a lot of resistance. There's a lot of highs in here, a lot of congestion. So there is going to be quite a bit of resistance as it tries to work its way higher. Not sure it's going to have as strong as a move. Again, it's going to play a lot with headline news out of Europe of what's unfolding. That seems to trigger most of the moves. Looking at commodities, we've got a strong dollar this morning. This morning we've seen it break out of this flag and start to move up, so that strong move is putting a little bit of pressure on things. Looking at crude oil, this is a weekly chart, and you can see how we've been flirting in these two red support zones, and now we're finally dipping down into this blue box, which is a possible little bit of a double bottom area. Zooming into the 4-hour chart, you can get a really clear view of those support zones. Crude oil came down, has been every time it dipped into this red level, we saw buyers step back in, sold back down, they stepped right back in. Buyers started to weaken after a while, wasn't really rallying as much, it was kind of grinding its way out, and then we saw a break below those levels, and then we've got into this blue support box zone, which is even more important, and we saw a nice strong bounce, but it got stuck under this resistance, and it's starting to head back down this morning. So we could actually continue to see crude oil head lower. Now if I just go to the daily chart, we had about a $75 to $77 target on the downside if crude oil breaks down, and if we just zoom out a little bit more here, we would see it more or less pierce these lows and come down to around the 75-ish, 74-ish. Usually it'll pierce the low, but overall it's getting oversold. It's coming down to a key level, and I think we're probably going to see a pretty strong bounce sooner than later, but I don't want to try and pick a bottom. Looking at the chart real quick, we've had a pretty strong downdraft, and then it started to grind its way lower at a little bit of a slower rate, so it was holding some of its energy, and then we've had another strong move down. We've seen a consolidation here, and we've had most of that measured move back down. So 76, 75, if we get one more down thrust, could possibly be the low, and from there we could see a very sharp move even back up going forward to the $100 area. Looking at natural gas has been holding up really well. It is trading back up near these highs. It's just kind of flirting with resistance from about a week ago. If we zoom out on this chart, you can see we've got a pretty good basing pattern here. Looking across these highs, this is going to act as a pretty good basing pattern. You could say that there's a possible big inverse head and shoulders. Of course, as this basing pattern unfolds, a break of this, you could flip this pattern to the upside, and we could see possibly about a 25% surge up here, which will bring us into more or less resistance from this previous consolidation. And that's just a simple measured move from the low to the high. You just kind of flip the pattern, and that'll usually give you your first kind of impulse thrust to the upside. So we're going to keep our eye on that. Overall, we haven't really cleared that level yet. If we can get a nice consolidation, bull flag forming here, we may look to go long in anticipation of a strong breakout. But overall, natural gas looks as though it's still trying to form a base, and it might be forming an inverse head and shoulders that could provide a pretty good explosive move to the upside. Looking at precious metals, here's the gold chart. This is a 4-hour chart of gold. Last week we saw a pretty strong sell-off, starting to form a little bit of a flag here. We are at a pretty major support zone, 1560-ish area. You can see there's lots of consolidation right through the middle of this noise. This pattern looks as though it could end up going even lower yet. But overall, gold is at a pretty major support level, and if we see that US dollar, again, this is the 4-hour chart, and if you can just flip back in your head and picture what the US dollar was doing. US dollar was had a rally last week, consolidation, and it looks ready for another rally to the upside. Well, if the US dollar makes that push higher, we're going to see the inverse more or less in gold. We're going to see another thrust lower in gold, which will bring us down into these key lows as a support zone, and we may be looking to nibble on a long position. Looking at we'll just do gold miners first here. Here are the gold miners. They pretty much played right into what we were anticipating. We had this bullish price action, and then we got this strong downdraft and a bear flag, and it came right down to our 44 target, which is right through this previous kind of pivot level here. Now it's getting a little oversold, may squeeze down a little bit more, and we'll see what kind of consolidation it does. If it ends up going and breaking these lows and works its way lower, then it'll be a little more bearish, and we'll have to see what type of correction it gets, if it gets stuck under resistance, or actually if we start to see some mini intraday basing pattern form here before prices possibly continue to go higher. And you could look at this as a larger kind of bull flag. If we just redraw that, you could say possibly got a big bull flag and prices could end up breaking to the upside. So we're going to keep our eyes on how things play out. Overall, I think there could be a little bit more downside today, tomorrow in the equities and precious metals as the dollar firms up a bit, but after that we could see a bottoming going into month end and the holiday. Looking at silver, silver is pretty much the same as gold. It had a long sell-off. It's trying to put in a bottom here. This is very bottomish kind of pattern. On a short-term basis, you can see we broke to some new lows. Zooming out even more, just let the chart load here. You can see we've got more of a kilo around the 26.13ish area, and I wouldn't be surprised if we saw silver pierce that level. You can see the both selling volume in gold and silver last week. You can see very, very strong prices move down with rising volume, so there's lots of fear and lots of sellers still in the market. We've got very light volume here as the market's trying to consolidate. This could end up sliding lower and piercing to a new low, which could trigger a very strong rally in silver going forward. So we're looking for a little bit more of a panic washout this week, and there could be an opportunity to get a very nice bounce across the board in different commodities and indexes. Looking at bonds, 4-hour chart of bonds, they've been holding sideways here. They kind of gave us a little bit of an indication last week when we saw them break down. We saw that that move in the market to the upside, and then instantly flipped and reversed and sold back down, shaking the market up. Overall, I don't really see anything tradable in bonds. I think they could end up working their way higher, but we're at some pretty major record lows for rates, and I don't really see any really tradable pattern for it at this time. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.